Coming up in today's video, we'll talk about the rebound in stocks, the sharp rise in oil prices and what this means for other markets. The VIX continues to come down, and precious metals are back on the rise. Did we just get the quickest turnaround in history? There was a pretty sharp bounce back in gold and silver prices. Let's talk about whether or not that has room to continue. As we get started, if you could do me a big favor, hit the thumbs up button. It helps me out on my YouTube channel here, and let's get into it. So first, we got to cover a little bit of news. We had some oil futures moving higher here this morning as U.S. steps up Russian sanctions amidst the Ukraine and Russia war. But Kuwait's oil minister says OPEC is ready to offset any shortage in the market by rolling back cuts. We also see China state oil majors suspending Russian oil buys due to sanctions. Chinese state oil majors have suspended purchases of seaborne Russian oil after the U.S. imposed sanctions on Russia. And this move also comes as refiners in India, the largest buyer of seaborne Russian oil, are set to sharply cut their crude imports from Moscow. A sharp drop in oil demand from Russia's two largest customers will put a strain on Moscow's oil revenues and force the world's top importers to seek alternatives. This could push up global oil prices. And here's a look at oil prices on the daily chart. And you can see by my markup here, I'm actually looking for bullish setups. And I've been watching oil for a little while here, but it finally seems like we may have some momentum starting to form, but I'm not fully convinced just yet. We are still in the context of what has been a pretty strong downward trend for oil prices, not just in recent times, but in the last few years. Ever since the breakout and kind of onset of the Russia-Ukraine war, oil prices dramatically rose and then have sort of been in this drift lower since. But I still think that there is a pretty good story for oil buys on a macro fundamental perspective, not just on a charting perspective. But before we get into the macro, let's just quickly talk about the price action. So we've seen some selling that has come in consistently with resistance, notably just around where we currently sit, around $62 per barrel. What I'm looking for from a technical signal would be a break of that downward structure, and then a pullback into this area would potentially show me that there could be some good risk reward on a bullish trade in oil. Here's what the Edgefinder has to say when selecting for US oil. It's getting a bullish rating overall, and you can see the technical signals here: seasonality favoring oil for now, trend reading to the upside, basically showing some momentum is forming, and then institutional activity as of the latest available data has showed non-commercials through the commitment of traders data are showing some pretty big bullishness on oil prices despite them being down. Sentiment is a bit neutral. Inflation data, however, suggests rate cuts are coming, which could be strong for economies around the world and hence the demand for oil. Economic growth signals are also very strong out of the US. GDP numbers came in much better than expected for the second quarter and are expected to be strong in the third quarter as well. Manufacturing PMIs also beat expectations and retail sales as well. So there was the macro simplified, and if you want to do this yourself for free, you can do so this week with the free week available on the Edgefinder. If you're interested in exploring our tools, you can do so by joining our Telegram channel. We'll leave a link in the description down below and the pinned comment of this video if you want to join our Telegram, which is where you can sign up to get a free week of the Edgefinder between now and October 29th. This gives you a chance to explore all the tools that you see in my videos without a credit card, without any sort of payment. You literally just fill out this form that you can find in the Telegram channel by clicking the pinned message, and then you can get access to the Edgefinder for free. We'll send you an email right away. It's an automated system. You can start playing around with the Edgefinder for free this week. Especially with the weekend coming up, this gives you a chance to explore the tool and make a decision as to whether or not you think it's worth purchasing for yourself in the future. And if it's easier, simply scan the QR code that you see on your screen right now to join the Telegram channel, which is where you can find that form link to fill out the form to get access to the Edgefinder. Again, the whole process only takes about 30 seconds to a minute, so see how fast you can do it. I don't know. Just scan the QR code. It'll take you to where you need to go. And enjoy exploring the Edgefinder. In other news, we had earnings reported from Tesla Motors, which of course initially dropped and has been rallying back here this morning. Not a really big move, but it had the potential to be in terms of what it could do to the rest of the stock market. I always like to use Tesla as a bit of a barometer and overall indication of what, sentiment in the market is. So let's take a look at Tesla's earnings report. You can see I've got it selected in the top right here on the stock box. And I'm looking at the earnings per share estimate versus the earnings per share actual. And Tesla's been all over the place. And in fact, in the last few years, they've not really had great earnings. And in fact, what you can see is sort of more of the same. The yellow represents what we expected, which was 56 cents in earnings per share relative to the expected, we only got 50 cents. So slightly weaker per share earnings per share. And so what we saw here was a miss of around 10.5%. Looking historically at our earnings surprise metric, you can see they've beaten by a wide margin in Q3 2024, but since then we've had pretty much beats or meeting expectation for Tesla. The options market implied move for Tesla for this event, a one-day move of around 7% plus or minus, was actually much greater than we actually saw. You can see today we're down about 1.7%. So long story short, the winner in all this were the market makers who sold calls and puts before the earnings report actually came out. And Tesla seems to be holding this area of support around the 415 mark, at least for now, and starting to try and fill the gap that was left from the earnings. Now, what does this matter to you if you are more of an index trader? If you're trading the NASDAQ or the S&P or the Dow Jones, well, this is a good thing. You don't want to see key players within the stock market collapsing, right? So yes, we got through the earnings. Were they great for Tesla? Not really. There was also poor earnings for IBM, but you can actually see IBM rallying back here today. Let's take a look at those earnings. And you can see IBM actually beat their earnings estimates, initially dropping, but rallying right back with a beat of about 8%. By the way, the stock box is another tool that if you already have the Edge Finder, you should explore the stock box too, because it's free to do right now as well. I'll leave a link in the description down below to sign up for the free week for the stock box if you want to explore that before our, oh, I can't say that. I can't leak the secret. Regardless, try out the stock box and the Edge Finder this week. Not really telling you why. Black Friday. And at least for now, price looks constructive on the NASDAQ for me. What we can see here is that we came down intraday. Actually, we could whip out the 4-hour chart here. Let's take a look at that. So 4-hour chart wise, we had this consolidation pattern after the huge sell-off, the fear selling that we saw 2 Fridays ago. We gapped back open on Monday, consolidated, broke to the highs, and retested. What I think is kind of nice here is that from a constructive basis, we actually have found some support, although a little ugly, around this area that we are pushing off of today. I've been saying it recently and I still think so. I think the NASDAQ is likely headed for fresh all-time highs. Here's a look at the reading on the Edge Finder, giving us a very bullish rating on NASDAQ with technicals, institution, inflation, and economic data showing some positive expectancy. Now, does this guarantee that the NASDAQ is going to push higher from here? Absolutely not. Sometimes people make the mistake when it comes to the Edge Finder of thinking that because the Edge Finder is bullish on something that it's definitely going to move higher. And that's definitely not what we want to convey about the tool. The Edge Finder simply looks at a collection of data, but this data could change. Let's say, for example, GDP numbers come out differently and it changes the scoring matrix here. Then I may adapt. My whole trading strategy is not to just drag open the NASDAQ chart and then whatever this says, just go out and do it, right? That's not what I use the Edge Finder for. The Edge Finder screens this data, helps me to build a bias, and then I go look at the chart. And that's exactly what I did. So even though NASDAQ was getting a bullish rating throughout most of this move here, I really waited until we finally got a pullback to get long. So I do want to make that distinction. And in fact, what I'll also be doing in today's video is linking in the top right hand for those of you guys who are trying out the Edge Finder. I want to encourage you to explore this video series where you can learn a lot more about how the Edge Finder actually works and how you can use it in your trading. So I'll leave that linked in the top right hand of your screen right now to explore further. It's a great time to explore that sort of playlist as people are trying it out for themselves for free right now. And yesterday I also got long the IWM, or the Russel 2000. I'll pull up my trade here. This one I have a position 500 shares of IWM on the long side. I talked about this in my video yesterday and decided to pull the trigger after seeing some sharp rebound happening off of the lows here yesterday. I still think we're in a very solid overall upward trend on the IWM, and I put my stop loss just below this kind of spike low that we saw last Friday. So my plan with the trade is, of course, to look for an opportunity to trail stops. I'm looking for fresh highs on the Russell as well, and if we can get that, plan is to move that stop loss into profit. I'm also still long the US dollar, which is having a decent day, and I still think that we are headed back up to 100 on this one. And my XLY trade, which is consumer discretionary stocks in an ETF bundle, is a little bit down here today following the Tesla earnings, as well as Amazon coming under pressure and Netflix. The consumer discretionary sector has taken a little bit of a beating here this week, but still looking resilient, and I would love to see if we can get a push back to the all-time highs for this one as well. And again, just riding momentum here. And when it comes to momentum, I also want to make sure that when you watch my videos, you know that what I actually talk about, I back with real stats. This is my portfolio between the full life cycle since I started it in March of 2020. The account is up 287 total percent, which has significantly outperformed the passive benchmark of the S&P 500 during that same time. So you may be wondering, how do you generate these types of returns? Are you taking massive risk? Are you just buying penny stocks and praying? And the answer is no. The answer is really two M's. And what I mean by that is momentum, or MOMO, as they say in trading land, momentum and macro. These two factors are the core to what I do and what I trade in the financial markets. I look at the macro and I build trade plans around it. Using the help of the Edge Finder as well as simple price action, I've been able to generate pretty good returns in the markets without taking a suspended amount of risk. My max drawdown during that time is also important to cover, and the max drawdown that I experienced in my account was roughly 31% compared to the S&P 500's. I think it was about 29% peak drawdown during 2022. And I'm referencing the S&P 500 because that's the passive benchmark that I compare myself to. And if you want to watch a full video on my trading performance, you can do so by going to the homepage on my YouTube channel, or maybe we'll share it in the top right hand of the screen. I'll be filming a new one pretty soon. And let's talk about gold prices, which continue to fly high here. Taking a look at our moving averages, which we've been referencing a lot in my videos recently, you can see that we actually did get some rejection off that 20-day moving average. I mentioned that I thought it would be more attractive if we did get a deeper retracement, but perhaps that is all the bears are going to get for now. We can see there's been a sharp rebound around the 4,000 mark, immediately finding buyers and pushing back up. We'll see what happens next. My opinion on this remains neutral. I don't have any long positions or short positions on gold, but I continue to watch it. You can see when I pull up the gold chart within the Edge Finder's AI scanner, it's getting a neutral reading, so I just don't have any trades here. From a technical perspective, however, this thing looks really strong, and the response of the 20-day moving average is pretty impressive. This pin bar, in the context of what has been just a pretty dominant upward trend, tells me you may continue to see upside in gold, and fighting it has been, again, a terrible story in 2025. Gold is up, at one point it was up 61% year to date, which is absolutely insane, given that this is usually, most years, gold is pretty boring and doesn't move that much in terms of a percentage basis when relative to, or when compared like relative to the NASDAQ or the S&P 500, gold typically doesn't move that much. So this year has been a blockbuster year for gold bulls. So congrats to anybody who has been on the precious metals bull side.
Well, I've been doing my back testing. I've been trading for a while. I'm finally qualified to get a payout. Let's do it.
All right, move over, you bag of bones. I've been funded with Maven for a little while, and it's time to request a payout. Watch this. If you're looking to get funded, check out Maven Funding down below in the description. With our promo code, as you see on the screen right now, you can get an additional discount off of any of their challenges, and they offer some of the fastest payouts in the industry. Not only do they offer really fast payouts, they also have some of the best prices in the industry by far. So if you're looking to get funded, check out Maven down below in the description. Even with the sell-off here recently, I have been seeing a lot of comments from people who have said that this has been a really rough period for them. And so I definitely feel for you. I know how, devastating it can feel, especially if you are playing around with leverage and got wiped out by this kind of move. I know a lot of people have been saying, I bought gold up here and what do I do? And I made a post about this, and maybe James, you could help us out, post this up on the screen. I made a post on my Twitter or on my YouTube about, what you should do in this situation. And people ask all the time, should I buy gold? Should I sell gold? Should I buy the NASDAQ? Should I sell the NASDAQ? And my genuine answer with love, with tough love, is that if you are just wandering around social media and you don't know whether you should buy or sell something, and you're just asking random content creators or other traders on the internet, something has gone terribly wrong. And I genuinely mean that. Like, I think that you should stop trading immediately. If you are somebody who's like, should I buy gold? Should I sell gold? And you don't really have any sort of trading plan, you're likely to lose money. And I say that with love and care, but genuinely save yourself the pain. If you are just guessing in trading, you really need to put a pause in what you're doing and go back to your drawing board, go back to demo testing, go back to understanding, in this case, if you watch my channel, you're probably interested in learning about macro. Like, take some time and actually learn about fundamental analysis. But so many traders rush the process where they refuse to take the time to actually learn something about trading and instead want to make money right now. And I say that with a little bit of hindsight bias because I too made that mistake. So I know what it's like. If you're in your first year or two of trading, you want to make money, you want to get involved, you see people making money on social media. Look, I get it. But here's the thing I would say. If I could go back and save myself a lot of money, what I would do is I would get a backtesting software. I would study fundamental analysis. I would listen to a ton of content. I would listen to podcasts. I would listen to financial, influencers who can really help you to take things to the next level for free. There's so much free value out there, especially this week with the free Edge Finder access. You can start exploring the tool for free and start learning something before you try and make money in the markets. But to finalize, for a lot of people who are wandering aimlessly through trading land, trying to guess where gold is going to go next, and they don't have a trading plan that has been thoroughly backtested and built on solid fundamentals or whatever your strategy is, if you don't have a strategy that is thoroughly processed, you're likely to fail. And I don't say that with any sort of like happiness. Like, it's painful. Trading is really hard for a lot of people. A lot of people make huge mistakes in trading. Don't be one of them. Failing to prepare in trading is essentially a guarantee that you're going to blow up money. And I know that I don't necessarily know each and every one of you single-handedly, but there is a real feeling as a content creator where I feel a connection with my audience, even if I don't know you individually. And I say that to say, genuinely, I know it sounds cliche or cringe or corny, but I do care about the audience that I have. I really do. And I want to say, like, I've seen so many people in trading world blow up a lot of money and make really big financial mistakes. And I really hope that you will take a step back if you are struggling with your trading. Trading can be very quickly turned into gambling for a lot of people and can be very devastating. And I know a lot of people probably resonate with this. So if you are in that place, there is nothing wrong with stepping back and saying, I'm going to humble myself and I'm going to learn something. Get on a demo account, take some time, explore the Edge Finder for free for a little while this week, and just take a step back from trying to rush the process. Trading takes a long time. It's worth it in the end if you can make it, but most traders are going to blow up along the way. And I say that, reluctantly, but it is the reality. So best of luck with your trading journey. Thank you very much for watching my content. And I would ask that if you enjoy my stuff, hit the thumbs up button, subscribe if you're new, and we'll see you back tomorrow.